Morning.
You're all excited to talk about compliance in the crypto space, huh?
Yeah.
I'm at a little bit of a disadvantage since I'm going up against the gentleman who's talking about cannabis, so I appreciate you guys sticking around and coming out for this. For an exciting topic, as I say to all my clients, I promise to make compliance as exciting as possible. So we're going to have some fun today, I hope, at least for me anyway. It's been an exciting past 2.5 years in the industry. I just got back from talking to a mix of law enforcement and bankers, as I mentioned to some of our guests in the back a moment ago. And this is the sort of the common refrain, Bitcoin is a solution for criminals, right? It's a den of thieves, and that's what's going on in the industry. And that's a problem for all of us, because we have a public relations problem. Everything that's bad that's this big to us, or to a reasonable person, is actually this big, right? I'm not a rah-rah guy, but it's sort of us against the world, right? We've got media, we've got bankers, Jamie Dimon, right? Bitcoin's a fraud. Everyone's rolling their eyes. Yeah. It's us against the world, and unfortunately, this has stuck. We've had things like Silk Road. Charlie Shrem went to jail, right? So we've had to deal with these things as an industry, and it's unfortunate. And a lot of people discovered the hard way that this isn't the ground transportation industry, that financial services is heavily regulated. It's a very, very difficult industry to break into, right? How many people know of the last time someone started a bank, right, or an insurance company? I know there's fintech and Stripe and things like that, right? There's some good examples on that side, but who's going to start a bank? Who's going to start an insurance company? Well, it's because of all this regulation. It's hard for me to say, but as a libertarian and sort of thinking about what are the impacts of things like Silk Road, and it was very difficult that people led with their heart and led with their mind in terms of ideology, and they encountered an industry that really doesn't care what your ideology is, they care what your compliance program is. And so that's unfortunate. So there's a little bit of a balance. Bitcoin is really a solution for friction, and it's the friction that's created by the banks. It's 3 to 4 days for settlement. 3 to 4 days to wait for a settlement. I can send a piece of software, I can send a contract, I can send architectural plans, I can send all these different assets instantaneously through instant messaging, through email, through all these other means. But try to send money, that doesn't work like that. Right? And that's the friction that Bitcoin has solved for. Some other friction in banking is not necessarily inherent in the banking system, but it's things like censorship. Right? We'll talk a little bit later about Backpages and how they were censored. But it's other industries as well, and other people that have ideologies like Julian Assange and WikiLeaks. The credit card companies cut them off, right? After Bitcoin. So unfortunately, we get that baggage. By the way, this is what my clients think goes on at a bank, and they're probably right. The old school banking. In fact, in many branches, this is still the case. There's an old bank in Chicago where I live that actually has a setup very similar to this. But what you get with this baggage of an industry is you also get the regulatory compliance baggage, right? Regulatory compliance industry, I shouldn't say the industry, the regulatory compliance application right now to the compliance industry is very analog, right? It's designed for analog systems. We're capturing information in account opening. Hey, fill out this form. Made of paper? Are you kidding, right? I've got to sit down and talk to a banker and help fill out this information, name, rank, and serial number, all in the hopes that if there's ever an investigation in the future, that information is on file with the bank, probably somewhere in a filing cabinet, right? That's the analog system we deal with. Round peg, square hole, right? Bitcoin compliance. How do they go together? So the Bitcoin community has some trouble early on, right? So the government says, well, what do we do? Right? We can't ban Bitcoin, that would be ridiculous. But we can guard the entrances and exits. Maybe as effectively as that fence does, right? So where's the government lining up in the Bitcoin space? They are guarding the entrances and exits to the financial system. Cash in, cash out, fiat in, fiat out, right? That's where they are looking for the bad guys, and that's where the regulatory implications are for those in the industry. Shout out to BTC Media, I love these slides, right? So you can see where we've come as an industry with all these great companies here, including some of our sponsors here today. So it's really an amazing industry to think that we've had all this growth and all these different business models. I'm going to run through a few. So first of all, show of hands, who here has a regulated Bitcoin company or is in some sort of regulated financial services? No? You don't want to raise your hand? Everybody's shy. Oh no, it's the compliance guy. I don't want to say anything. No, so I'm going to run through a few real quick, and then I really want to speed through this and get some time for all your questions, because it should be customized. We have a great, small, intimate audience here, so we have a chance to do that. Bitcoin ATMs, there's more than 1,000 now in the US. I remember when there's a couple hundred, and people were telling me, oh, that's a failed business model, that'll never last, that'll never go on. Well, it has gone on, and it's more the result of regulation that Bitcoin ATMs have been successful. Because if you want to start an exchange, which we'll talk about next, if you want to start an exchange, you've got to get licensed in every state in which you do business. Right? Because state licensure for money transmission as well as FinCEN at the federal level. So we've seen a little bit of a localization around the Bitcoin space. Because if I have a Bitcoin ATM and it stands right here, that's in Colorado, it's in one state. I don't have to worry about what's going on in Nevada or California or anywhere else. So as a result of that, we've seen sort of a localization of transactions, and not to mention the convenience factor, right? I don't know if you guys seen Bitcoin ATMs or had a chance to use them? Real quick, I'm not making necessarily any endorsements, but just because they showed up well on my slides, we have General Bytes there on the left in yellow, and then on the right, Genesis Coin ATM. Again, pretty simple model. The great thing about Bitcoin ATMs is it allows someone to get in a low dollar amount, right? They can put in a small amount of cash and have their first taste of Bitcoin, have their first experience. And there's also something familiar about a Bitcoin ATM, since ATMs are, what, a 1960s invention, something like that, kind of mainstreamish in the 80s. Right, so there's something familiar about it, and I think people are more apt to do that, whereas the mainstream sort of looks at local Bitcoins and thinks, so I'm going to meet someone in a dark alley with a trench coat and exchange Bitcoin, and that just doesn't seem right. But and anyway, so I want to point out some things that I think we're ahead of the curve, and I mentioned this to one of the members of the audience earlier. We're ahead of the curve on AML, and I don't think we get enough credit for that. We have a digital thumbprint reader. We have the capability of doing KYC. We have cameras on here. We can have that hooked up to our smartphone to do an ID, selfie ID verification. I don't know if you guys have heard of that. Right? Hold up your ID next to your forehead, takes a picture. I don't know of any ATM in the traditional banking system that does that. Right? I don't think we get enough credit for that. I think that's pretty cool. Now, are people utilizing that technology? I hope so, and certainly my clients are, but I want to make sure that people understand that we have this tremendous ability to meet those compliance expectations. One of the other things that's interesting about Bitcoin ATMs, the average transaction, depending on who you ask and what day of the week it is usually between $200 and $400, right? So it's on the lower end of the spectrum. I was recently talking to law enforcement, as I mentioned earlier, out in California, and they were talking about a case where they actually had FBI agents who were sitting near a Bitcoin kiosk, Bitcoin ATM, and they watched people do some transactions and, kind of let some things go, and then all of a sudden they followed someone, they actually tailed that person and ultimately linked it to human trafficking. So it happens, right? Bad guys are using it, just as bad guys are using sneakers, right? It's a libertarian argument, right? Can't stop selling sneakers, can't stop selling crowbars, right? Just because intruders use them. So it's pretty interesting that local law enforcement, in this case, would be more interested in that. What I found refreshing when I did talk to law enforcement in California was they're much more interested in catching the criminals that are using this than criminalizing those that offer these services, which I thought was really refreshing. And I'm certainly on board with that, especially as we talk about things like human trafficking. If we go down the path of the war on drugs, maybe you kind of lose me. But be that as it may, right? A bunch of libertarians, that is what it is. But one other thing on Bitcoin ATMs, I was actually talking to a client recently, and we sat down and we're trying to get them hooked up to an exchange so they could purchase their Bitcoin in bulk, right? That's the business model. You purchase it at maybe 3%, and then you sell it at 8 or 10% of the unit. Buy wholesale, sell retail. And so this particular exchange was looking over our KYC and AML information, and they said, this looks good. We're really happy to be working with, enter client name here. But we noticed one thing. We noticed you're using blockchain explorer technology for your higher tiers. We want you to use it for all your customers. Right? So the goalposts are starting to move. There's starting to be more expectations, right? Before it's just capturing information, as I said, with the legacy system. Now, if there's technology out there, these exchanges and these regulated institutions are expecting people to use that. So I thought that was pretty powerful. And again, I put us head-to-head in many cases against traditional banking, and they'd be hard-pressed to say we don't care about or we're not designing our approach around AML or compliance. Bitcoin exchanges, there's a screenshot from the mobile version of Coinbase. I won't spend too much time on that. I sort of alluded to it earlier, the fact that exchanges are getting more on a national level. If you offer something online, people think it doesn't matter where I am, I should be able to use it. So they run into some state licensing issues based on the different state laws and different applications of money transmitter laws, which I know our next panel is going to get into, so I don't want to jump the gun on that. As far as regulatory implications, a lot of the exchanges now are at scale, like Coinbase, so they really have strong, robust in-house compliance programs, whereas a lot of the folks that I work with, more on the Bitcoin ATM and the trader side, usually one of the founders who draws the lowest straw is the compliance officer, right? So it's a little bit more formalized, it's a little bit more, I don't want to say bank-like, because that might get me in trouble with the fans of Coinbase, but they're going down that path. And so when you do go down that path, expectations continue to increase. So coming from the world of AML and having a decade of experience there, I can tell you every year the stakes get higher, every year the expectations get higher, right? This year's gimmick is next year's expectation.
What's the outlook on the Asian exchanges?
I'm sorry?
The Asian exchanges.
A question was about the Asian exchanges. I'm not too familiar with the Asian market, although we've seen some activity going on in China, and it's a lot of false stops on that, so I'm not exactly sure where we are on the Asian market. Again, we're focused more domestically, but that's certainly something to keep an eye on for sure. Talking about Bitcoin traders, it surprised a lot of bankers when I told them that they're going to have a lot of traders come in and to use their bank accounts, and they were surprised, and which I guess kind of surprised me. Maybe it's good news for the traders, I don't know. Bitcoin traders are an exchange by any other name. So early on in the industry, there was this thesis that if I'm trading on my own account, to paraphrase some of the words that FinCEN use, that seem to be taken out of context from FinCEN, and they kind of backtracked on this, right? If I'm using my own funds and I'm just trading online, I'm just a user. Well, we found out through some select enforcement actions that that's just not the case. That if you're offering it to other consumers in an open environment, FinCEN has sort of changed their interpretation on that. At least that's the direction we see it going in. I don't know if we have enough examples just yet on that, but that's kind of where the needle is going. And if we looked at, as I transcripts of commentary from FinCEN and from other regulators, because that's what I do in my spare time, I'm a barrel of laughs. We can see that a lot of the transcripts, they talk about, well, there are a lot of people that don't understand that they're regulated, or don't really understand that this applies to them, or we wish there were more people that registered with FinCEN and knew what they were doing. So that's a little bit of a change in direction, and it's hard to know, like, what's the difference between a trader and an exchange? They're kind of doing sort of the same thing. Or what's the difference between even a trader and a Bitcoin ATM operator? They're buying at a lower price and selling it at a higher price, hopefully. Or price or percentage, what have you. So this is a shot from local Bitcoins. By the way, it did surprise a lot of the bankers that I spoke to about the third-party cash deposit being a common method through local Bitcoins. If any of you are traders or know of traders, a lot of the activity now, now that I've said it, I guess, and I'm sure others have, if banks don't already know, when you go into the branch and deposit third-party cash in exchange for Bitcoin, and you're depositing into the trader that you're exchanging with, into his or her account, you typically take the deposit slip and usually write something like no refund, and take your picture next to it, or something like that as a means of verification and or a means of fraud prevention. So what I told these bankers is, wasn't it kind of suspicious if someone's taking a picture next to their deposit slip in the lobby? That's going to stick out like a sore thumb, right? So there are these definite compliance implications that you need to be aware of and you need to be conscious of if you're in that space, and certainly tread lightly. ICOs, we're going to have some great speakers talking about ICOs later on, so if you're in the ICO business, I heard from one gentleman earlier who's in the business, hold those questions. We're going to have a lot of discussion about ICOs as a hot topic. For those that don't know, an ICO, kind of a play on the term IPO, right? So initial public offering, in this case it's an initial coin offering. So here's an opportunity to be on the cutting edge, at the forefront of a token sale, right? You have an opportunity to be something of an investor in this coin. So there's typically a website and a white paper, and here's what we're going to do with your money. Unfortunately, early on in the industry, this seemed to be sort of the prevailing attitude, right? So, yeah, we're going to be the ICO of umbrellas. We're going to be the ICO of office furniture. Okay, great. So send me your money. Great, I want to invest, I want to invest. No KYC, no vetting, no nothing. Now they have a pile of cash, and it's, oh, I'm expected to do something, right? You have to do something with other people's money. There's an expectation. An expectation of future gains is one of the elements of the Howey test, which again we'll go over in the next panel. Right? But people just didn't seem to worry about that early on. And so unfortunately, now we have some great innovations that are out there, which is fantastic, but we also have a lot of people that are sort of hanging on and wrote their white paper on the back of a cocktail napkin and lipstick. So it's going to be an interesting scene. I want to talk about the response from regulators real quickly. So the SEC came out with a bulletin. So put a pin in the term bulletin for a second. So the SEC came out with a bulletin and basically said, look, for what you're doing in the marketplace, generally speaking, it's highly likely that you're going to, I'm paraphrasing of course, it's highly likely that you're a security. And we expect you to, be regulated in such a manner. And so a lot of these ICOs didn't really understand what that meant to be in the security space. What was your regulatory responsibility? What were your obligations from the SEC? And again, we'll go over that later on. But I thought it was interesting they issued a bulletin, right? Because they could have issued guidance. They could have issued an enforcement action, made an example out of someone, but they issued a bulletin, which is sort of the lower card they had to play, which makes me think that they may have some other cards that they want to play down the line. What I see, and what I think I'm going to see going forward with the SEC and ICOs, is I think they're going to take the opportunity to say, okay, we gave the shot across the bow, we gave this industry a warning, right? We didn't target them, we didn't say Bitcoin bad, coins are awful, we gave them a chance, right? And you're going to start to see cease and desist letters go out, because it's very easy to auto-send a letter. So what they're going to do is they're going to go on a site like Token Lot or some of these other sites that have a list of ICOs, and they're going to go, not a security, not a security, not a security. Send a letter in the mail, cease and desist, right? Big bold letters, SEC letterhead at the top. Pretty intimidating, right? Give your investors their money back, close up shop, or else. I don't know about you, but I don't want the or else.
They've done it already.
They've done it already? Yep. Because yeah, they had a recent example that was after their bulletin. But yeah, I think that's going to become more mechanized, and they're going to do it at scale. Versus right now it seems to be a little bit more selective, but I think they're really, if they haven't done so already, my guess is they have plans to do this continuously, because there's new ICOs every day. And if you're trying to get your lawyer to say that, oh no, it's a membership token, or try to wordsmith it, it's going to be a tough sell. Yeah, donation-based, I've heard many different terms. Yeah, no, it's, don't get your lawyer to lie for you, please. So a little bit about the law enforcement response. I guess Officer Suave here found somebody in the alley selling Bitcoin. Yeah, law enforcement has, in my opinion, been a little bit behind the curve, right? And that's for many different reasons. And when I talk to folks, as I have in law enforcement, they're overworked, right? Understaffed, and many of them, depending on the size of the department, are more generalists. Generalists meaning they cover all different areas. And so how much time do they really have to get to know the crypto space? How much time do they really have to dive deeper, know the players, know what's going on, right? And I told them, okay, the best place to start is maybe to go online and start going on forums and Reddit and just listen. Do what politicians call a listening tour, right? Go out there and listen to what's going on in the industry. And admittedly, they've had some trouble with that. So they focused more on, again, I mentioned this earlier, the criminal side of it, looking at, okay, well, who's using the Bitcoin ATM? Who's out there that we can find? Is there one case we can break open and use it that way? And in my opinion, I think it's best that they focus on the actual criminal activity instead of going to harass the owner of the Bitcoin ATMs we saw earlier on the screen. Some cases that have been, I guess, in the news or some different elements of criminal activity. We've all seen about ransomware, giving Bitcoin. Right? Here's my address, send me some Bitcoin. If you're a regulated institution, you have an obligation to report someone that is buying the bounty, or what will effectively become the bounty for ransomware. You have to file a suspicious activity report. or a SAR. That's criminal activity, it's a felony. So you have to report that activity. By the way, on the SAR form it says subject, so it's politically correct. You're not calling out a suspect. So you can put the victim, or you're supposed to put the victim on there as well, whoever's involved in the transaction. So we have a clue for law enforcement to follow. I guess my pointer's not showing up, but we have a public address, which we should include in the SAR as well. So definitely want to be in a position to report that. You know, not everybody's going to say this is the reason I'm buying it, but if you do come into contact with that information, again, there's this concept called willful blindness. You cannot pretend that you didn't hear something. I guess if you're a bank, you can. There's that concept, and you cannot ignore what you hear or see. Real quick, and then we'll get to some future casting of what's down the road ahead. Human trafficking, I put up this slide because it is a human crime and involves human beings. I mentioned the example earlier, California, where the FBI traced someone at a Bitcoin ATM and then busted open an investigation into human trafficking. So we could have a debate about censorship and what that means. This is a screenshot from Paxful's website, where they're providing a conduit for payment through Bitcoin. And you know, I had a discussion, and the law enforcement pulled me aside and said, you know, it's kind of troubling that they would go out of their way to sort of advocate for this workaround. And we could debate again censorship of back pages. I don't know if anybody knows, but in 2015, back pages no longer, or was effectively cut off by the credit card companies. So in 2015, the sheriff of Cook County, vote early and vote often, Chicago, right? Sheriff Dart started a public letter writing campaign in which he said human trafficking is a scourge. We've made all these arrests and we've traced everything back to back pages. It's horrible, you need to shut it down. And he sort of named and shamed, and the credit card companies just said, we're out, in succession in early 2015. And so again, when you have that friction, enter Bitcoin, right? They're going to take in that lag and provide that payment opportunity. So again, I'm not here to necessarily sort of debate, you know, censorship versus, you know, Bitcoin as a solution, but just know that things like that, again, if we're under that microscope I talked about earlier, if it looks this small, right, but it's this big, so the mainstream, this doesn't really look good. So, talk about the legalized cannabis industry. I feel as a compliance professional, I have an obligation to put legalized in quotes, because it's legalized at the state level. Cannabis is still illegal under the Controlled Substances Act, 1970, so on and so forth, right? But the cannabis industry has, again, been cut off by credit card companies, right? They've lost that opportunity to work with credit card companies, so they deal in cash. Well, what's wrong with cash, Joe? Cash is great. Well, cash is great until, as I've been at these dispensaries in the back end, or the back of the house, boxes, right? It looks like a college dorm room. There's like knickknacks all over the wall and stuff piled up, and there are boxes full of cash. Joe, I got a problem. Oh yeah, it looks like you have a terrible problem. No, you don't understand. This is a target. This is an issue of public safety. In fact, the Kane County Sheriff, which is Seattle, Washington, for those that don't know, the Kane County Sheriff came out and publicly said, the fact that banks won't deal with this is presenting a public safety issue, right? And so the Bitcoin industry comes along and says, hey, we don't censor anyone. We love everybody, right? So why don't we develop some payment rails? And there was another session about this earlier today. Why don't we develop some payment rails where we can work together and accept that as payment? That's great. The only caveat to that is that if you are in that payment space, know and understand there are still obligations that apply to you, like filing a SAR for all the transactions that involve marijuana. Because again, it's still illegal under federal law. And so the government has said, hey, it doesn't matter what the states say, it's still illegal, so you have to file a SAR. And by the way, here are the 3 types of SARs you have to file. Here's what you have to put in big bold letters on each SAR narrative. And we're going to be checking in with you quite frequently because that's really high risk. So it's not a smooth sailing. The good thing about the Bitcoin space is we work well with technology, we work fast, we're efficient, we're everything the banks are not. So the opportunity for us to scale that and really get the technology on board and be able to provide services in a safe, regulatory, and effective manner is certainly there as compared to banks. Believe it or not, Bitcoin does a great deal with self-policing. And I think we saw that with Mt. Gox, right? So we saw a lot of forums where people were posting, hey, look, I don't know, might not want to keep your funds with Mt. Gox. looks a little sketch. Right now we're seeing a lot of activity around OneCoin. Right? So anybody here heard of OneCoin? Right? So OneCoin purports to be a cryptocurrency. Allegedly, they are allegedly a Ponzi scheme by some people have said that, or there's something wrong with OneCoin inherently, right? Because they're not offering a currency that can be bought and sold through any known exchange, right? So it's very controversial, and in fact, a lot of foreign governments have either kicked them out, said that they're publicly under investigation, or have somehow put roadblocks in the way, or somehow made it that we are looking into them. Well, anyway, the self-policing of the Bitcoin space would have told you years ago, hey, there's something wrong with this. Hey, look at this. Hey, there's articles. And we've seen articles, whether it's in CoinDesk, Cointelegraph, BTC Media, of people actually calling it out and saying, whoa, hey now, I don't know about this OneCoin. You know, I'm not prepared to necessarily put an allegation out there or charge them criminally, but there's something wrong. You know? And I think that that's a good method of self-preservation for our industry. Right? Because historically, the financial services sector has done a shitty job of self-regulation. And that has allowed the government to come in and say, you don't know what you're doing, so we're going to come in and we're going to regulate the hell out of you. Right? I'm not saying that this is going to stop regulation from coming, but maybe it'll slow down that pace of regulation if we stay on top of self-policing and do what we can. And there are great groups out there like Point Center and other advocacy groups and organizations that do a great job of communicating that. But we need to be on top of that. I'm not saying go out there and be a detective in your spare time and find all the scams, but be part of those discussions and help us self-enforce to the best of our abilities as an industry. Maybe not like these guys, but. Blockchain is the solution. So not many people have heard of Bitcoin or ICOs when I talk to the bankers, but they sure as heck have heard of blockchain. And so I switched the narrative. I said, okay, let's stop talking about blockchain technology, and let's talk about blockchain as a resource for tracking and looking at transactions. So we can see in this case, right? And I'm not sort of, endorsing any particular product or service, but ScoreChain was kind enough to share some slides with me for an example, right? You can see here all the risk profile work that they're doing, right? They even assign a risk score. This is what banks do. And by the way, banks only did that up until a few years ago. Started assigning risk scores for customers. This technology is nascent, and we already have risk scores based on activity on the blockchain for Bitcoin. So it's still experimental. I've still heard mixed reviews on the effectiveness of this, and obviously with sort of machine learning over time, this is going to get stronger. We know that, right, historically. But again, today's gimmick is tomorrow's expectation. A couple more slides on being able to see, is it tied to mixing? Is it tied to local Bitcoins? Apparently that's a red flag. At least according to this particular software offering. Things like, is it tied to a gaming website, transaction history? Really forming really getting to know your customer, right? We talk about KYC, knowing your customer due diligence. This is what it's all about. Now, we've begun to unmask things on the blockchain. We're getting better and better at that technology, for good or for ill, whatever you think of that, regardless of what you think of that. And that's given the rise to altcoins. Altcoins, of course, alternative coins. Altcoins, kind of like alt-rock, right? Sort of on the basis of Bitcoin, like on the basis of rock, but an alternative. And so we've seen a rise in altcoins, and particularly those that advocate in some form or fashion being sort of a privacy or a zero-trace type of coin, like Monero, Zcash, and Dash purport to be. So these new coins have come out as a result of Bitcoin, right? Bitcoin was sort of the basis, and they said, okay, we like this, we like rock, but we like something alternative, so we'll create alternative rock. We like Bitcoin, but we're going to create something alternative to that. And when some of these coins have different affinity groups tied to them and different causes and certain things like that. Most of the altcoins are junk, right? But there are some that will rise and still come and go in terms of market cap. But know this, that these sort of privacy-related coins are coming up as a result of our ability and our technology to analyze the blockchain. Right? People think, oh, Bitcoin's anonymous, Bitcoin's anonymous. No, it's pseudo-anonymous. And that pseudo is becoming smaller and smaller, thanks to new technology. How will we, as compliance professionals, or that's me, I guess, how will I, as a compliance professional, and how will those in the industry be forced to adapt as a result of this, and what might the government think when and if these coins start to take over, or start to gather some momentum? I don't know. I guess we'll find out. A little quickly on the road ahead. Consumer protection has been a big topic lately in Bitcoin. There are a few articles written about that. I know Coinbase and Brian Armstrong has been very public about their inability or their concern about their ability to scale customer service with the rise of their company. And that's true in any industry, and I'm thankful that he was upfront about that and honest with the industry. But we've seen a lot of rise in consumer complaints. And I'm definitely not putting that on Coinbase. I think that has more to do with the mainstream coming into Bitcoin. So as we get more and more mainstream individuals, right, when mom and dad start using it, now we know we've gone mainstream, right? Or someone, someone that we wouldn't necessarily associate with the tech community. But we've always been this sort of small community in the crypto space. We've been able to help each other, answer each other's questions, point to different resources, and we'd have the answer pretty quickly if we didn't already have it in our head. But when you start to reach a mainstream audience, now it's a little bit more difficult. You're talking to someone who wasn't there from the beginning, didn't go through all those obstacles, wasn't a part of that industry, and maybe isn't wired, so to speak, in that tech mindset. So when something doesn't work right, they get upset. And when their initial complaint, their initial observation is not taken care of, their ticket in the window sits there for days and days, it rises to the consumer protection level, and might come to the attention of folks like the CFPB. Right? They've been pretty mum for the past couple of years, and the reason, as Coin Center rightly points out, no one's complaining in the Bitcoin space. There are very few complaints today. Right? Very few complaints. And by the way, most of the complaints that they do have are complaints against the banks discriminating against people that are trying to buy Bitcoin. So there's a little bit of irony in that. But in any case, I do see complaints rising, not because Bitcoin's bad, not because you guys aren't doing your job, but again, as we mainstream and we have those growing pains, we're going to experience more consumer complaints, and it behooves all of us when we deal with our customers to document any complaints, right? It could be just a basic spreadsheet. Just open up a spreadsheet and write it down, right? Because if a regulator comes a knocking and they say, well, what was this? What was that? And I talked offline with a colleague about, someone was contacted by a regulator as a result of something that started with a consumer complaint. Well, did you document it? Did you write down the dates? Did you write down who you spoke to? Did you write down what the problem was? How was it taken care of? And the last column should always be, how are you going to make sure, to the best of your ability, it doesn't happen again? Regulators love to see something like that. So how are we documenting that? How are we staying on top of that? Oh, Joe, I opened a spreadsheet and I only have 1 or 2 consumer complaints. That's great. That means you're doing a great job. But it could be those 1 or 2 complaints that rise to the level of an examiner. And you want to be on your game. I don't remember what I had for breakfast this time last week, so I'm surely not going to remember some incident or some back and forth with a customer that happened 6 months ago. We're expecting to see more enforcement actions. I'm not not here to scare you or anything like that, but the industry's growing. Right, it's a numbers game. We're going to see more enforcement actions. There's some going on behind the scenes that obviously I can't talk about, but we're going to see more enforcement actions come down. They're not done with us. The regulators have said that we're not done with the industry. We see that opportunity to engage. Right. We talked earlier about cease and desist orders in the ICO area with the securities folks. So yeah. With that, I'll turn it over to you guys if you have some questions. I answered all the compliance questions. Everybody just wants more coffee or snacks? No? Do we have any questions? I invite all of you to stick around because we have another panel coming up with some lawyer friends of mine in the industry. We're going to talk a little bit more about ICOs and some other areas of focus. So I focused on the shoe leather, gumshoe side of things with compliance. Now we're going to get the legal folks in to help you dot your I's and cross your T's. So one last chance for questions. Otherwise, I want to thank all of you for coming out today. And yes, sir. Thank you, sir. You saved me.
Yeah,
go ahead.
Yeah,
Gentleman in the front.
Do you find that compliance is different from a company depending on where they're registered, whether they're registered domestically or foreign?
So the question was foreign versus domestic registration. What is the engagement regulators? I'd say, and a lot of my colleagues in the industry have said this, if you want to start a business and you're worried about regulation, maybe the U.S. isn't the top choice. I think the U.S. has been on top of things with regulation. It could always be worse. I don't necessarily think it's bad, but yeah, there is some forum shopping going on right now where people are picking jurisdictions that are a little bit more favorable. The thing you have to understand is if you have customers in the US, you cannot just simply set up shop in another country like Canada or even across the pond, right? And simply say, well, I'm not a US company. Well, FinCEN will come along and say, well, you have US customers, so therefore we assert jurisdiction. It's something called extraterritorial jurisdiction. I'll let the lawyers talk about that later. But yeah, so I guess the long and the short of it is, it's tough in the US. It could certainly be a lot worse, right? Some countries have actually outlawed cryptocurrency, but yeah.
Do you think that if you're dealing with US customers, does it make any difference as to whether you're a US company or a non-US company?
Yes and no. I mean, I think prudently, it's a lot easier for the regulators to go after you if you're a U.S. company than if you were somewhere else. Again, I'm not advocating we all sort of flee the U.S. in the hopes of getting away with something, but yeah, it just becomes a lot more intense logistically for regulators and for law enforcement to be on top of that. But again, the same application, the same expectation. And FinCEN said this a while ago. I think this was sort of pre-Bitcoin, where they were seeing a lot of money transmitters in the legacy side of the business, right, that were actually going to different countries and saying, well, I'm not in the U.S. And they actually came out in their guidance and basically said what I said. You can't just go across a border and think that the rules don't apply to you. If that were the case, we'd all just go over to Canada, you know, and look over the border and say, okay, well, or Mexico or somewhere else, and just say, yeah, our customers are still the same.
But all the
we just
people
happen to be over here.
opening up in different countries aren't selling to U.S. citizens.
Yeah, okay, so if you're not selling to U.S. citizens, yes, there's a possibility that, you know, you've been able to sort of shake that. But that minimum and broad language that the U.S. uses, the U.S. government uses in terms of ties, again, our lawyer friends will clear that up for me. No, they don't want to? Okay. I guess we'll just let it stand for now. Yes, sir?
How much do you view like future forms of quantum computing to like blockchain?
Okay, so that's a little bit above my tech pay grade. I don't have an answer on that.
It's like more like homomorphic encryption, how you have to maybe establish a 1024 hash rate, which might actually require Nexus to actually have a satellite in space for it to happen. But you wouldn't be able to do it on your own coin. You'd have to do it on like the Ethereum blockchain and hope that they did homomorphic encryption, because it's just something you wouldn't be able to do if you wanted to start your own blockchain unless you understand it.
Any more questions, clients' questions?
How much
One or two? Go ahead.
Sure. How much can one get away with putting in the terms and conditions to sort of passing those responsibilities to the customers? For example, I know that, at least I've heard that Bittrex puts in their terms and conditions that if you're from certain states, you shouldn't trade on Bittrex. Though, you know, they don't really, you know, chase people down, so there are people from other states doing it. So, but it delegates the responsibility on them, customers.
Right. So a quick comment on that, and then again, our panelists, the lawyers will clean this up for me. But yeah, so the responsibility, I don't know what the legal obligation and what the terminology is for that, but I do know that a lot of those out in the marketplace are using a geolocation and other IT services to say, okay, if you're from North Korea or New York, I can't do business with you, right? So there are those steps that are being taken. Are they enough? I guess we'll find out momentarily. Was there? I think there was one other question.
I was just curious what you did. What do you do exactly? Do you provide services to the crypto community in some way, or?
Sure.
Sorry. Yeah.
Yeah, sure. So our company, BitAML, we do regulatory compliance consulting. So we do everything from drafting written AML policies and procedures, KYC, help with onboarding. We do project management for companies that are scaling and need in-house compliance teams. Again, all on the crypto side. So I'm a legacy bank defector. I was in the legacy bank industry for a decade, doing AML compliance leadership as well as fraud prevention. And so that was a decade enough. We've been doing this for 2.5 years, and we have a team of 4 or 5 folks across the country.
Is business good?
Very good. It's very busy. Yeah, death, taxes, and regulation. I guess those are the 3 things that will always be there.
Thank you.
Yes, sir. Does your company function in the aspect that it'll do the KYC and AML for an ICO or for an investment company, or do you just do the paperwork and make sure that it's compliant?
Yeah, I guess that's a good way to look at,
Or
written
would you
AML
actually do
programs.
the
So
KYC and AML for each individual?
we don't
investor?
perform the actual service. There are a lot of software as service programs that are out there, and we can speak offline about some of the options you might have depending upon your need. But we do sort of the structural work of, okay, here's what we recommend you gather at account opening or at the time of transaction.
In a consultant kind of situation.
In a consulting situation, but also helping you put pen to paper and have a written AML program, because FinCEN and the other regulatory agencies require under Title 31 that you have a written AML program. So I've talked to a lot of clients that say, well, I do it, why do I have to write it down? And it's like, well, again, round peg, square hole, this is a legacy analog industry. You're expected to document that and have it down on paper, or PDF, I guess, in this case. So that's where we help our clients, and then we're in a position where we put them in touch with some of the different software resources and maybe help them staff up as they grow, and hopefully become a larger member of the crypto community. Cool. Any other last minute questions? All right. Well, very good. Thank you very much.